Yo, what's up guys, Felix from Giant Lifestyle. Welcome back to the channel. In today's video, I'm going to be talking about the different bank accounts needed inside your business when running your business. Now, hopefully you can hear me clearly as I have my dishwasher going in the background. But like I said, in this video, we're going to be talking about the different bank accounts you need when running your business. Now, when you first start your business, you don't actually need these to initially start. If you have an idea for a side hustle or something to bring some extra money into the door right away, then this isn't absolutely necessary that you set up all these different accounts and incorporate everything to get everything legitimized and on paper right in the beginning. My personal recommendation is if you're starting something out for the first time and you're doing a side hustle or a little business, get it off the ground, see if it works, see if it's a good fit, and then you can go ahead and make everything legit and put everything on paper. But once you start actually making some money, it's a good idea to have everything organized and have different money in different accounts. So the first thing we're gonna be talking about is, number one, you should definitely, like I said, once you set everything up, get everything on paper and turn it into a real business. Whether you're going to be doing an LLC or an S corporation, whatever you're going to do, definitely advise and sit down with an accountant. I'm going to be making a video with my accountant soon, so she can give you some things that will help you for your business when it comes to taxes and how you can save on taxes. But once you actually start making money, hire a tax professional so you can get the best strategy on how to actually do your business legit and then also save on taxes. So once you actually set up an LLC or a, basically an entity, whether, like I said, it's an LLC or a S corporation or whatever it might be, you're going to want to make a business account. So that's one of the biggest mistakes I made when I first started my business. It was actually my medical commodities business. And if you guys want to learn how to buy and resell diabetic medical commodities, check the first link down in the description. But that's the biggest mistake I make, and a lot of people do that. They will funnel hundreds of thousands of dollars into a personal account. So, you really lose out when you're putting the money into a personal account. You lose out on the potential of business credit, taxes, and a lot of different things when you just have a business account versus a personal account. So make sure all that money, if you start making a lot of money with your business, that you actually put it into a business account. So the first account you're going to want to have is an operations account. That's where basically all of your main expenses are coming out of, and you don't want to have any personal expenses coming out of this. This is all going to be, main expenses, whether it's recurring services for maybe software, whether it's payroll, subscription services, paying contractors, whatever it may be. This is your main expense account. This is where you're going to have all your receipts for your write-offs. It's also important that you really want to be organized, and that's why you want to have all these accounts in case something were to happen. If you were to get audited, the IRS is going to go after people that are super unorganized. And if you have everything like, this is my main account, this is my savings account, this is my tax account, if you have everything with your I's dotted and your T's crossed, then they're not going to give you as a hard time. So it's really important that not only are you organized, but you can show where everything is and how everything is accounted for. So like I said, the main account is the operations account. That's rent, payroll, subscription services. That's where all of the money is flowing in and flowing out. That's like your main hub. The next one is your marketing account. So if you're doing advertising, or if however you're marketing your business, that is where you want to put that money. I would typically say a percentage every single month, and I'm not going to talk about percentages in this video of how much should go in there, because it really depends on how much you're actually making inside your business per month. And as far as percentages and how much you should put towards savings and taxes, that should be something that you should do when you sit down with your accountant. But you should have a marketing account, whether it's 10% or 20% or 30%, that you put aside after the end of each month so that you can put in that marketing account. And that could be for your Facebook ads, that could be for your Google ads, that could be for your print marketing, whatever the case may be. But you want to continuously reinvest into your business if you really want to grow your business. Some businesses can operate off organic marketing, but if you want to take your business to the next level and be able to scale it, you're going to want to have a marketing account, and that's what you should have this for. The next thing is a savings account. So a savings account is crucial. I typically like to have 6 to 12 months in that savings account that can pay for my bills, expenses, lifestyle, and basically my entire operation in case something were to happen. For example, look at COVID. A lot of people clearly didn't have a beefed up savings account to the level that it needed to be, because when COVID hit, it basically wiped everybody out. So make sure you have a savings account, just like your marketing account. Out of your operations account, every single month you should maybe dump 5, 10, 15% into your savings account, just to be safe. If something were to happen, if everything were to blow up in your face, if you were to stop making money for the next 6 to 12 months, having this savings account can kind of allow you to pivot to the next thing and not be worrying. A lot of people, are literally just either paying themselves too much or just not divvying up the money and, separating the money every single month at the end of the month into separate accounts. Maybe they just want to see too much in their personal account or too much in their operations account, and it's important to put it into different accounts. So in case something were to happen, you have 6 to 12 months of living and expenses covered, so you can figure out what you're going to do next. The next thing you're going to have is an opportunity account. So this is actually something that I just recently started, but every single month I put some money into my opportunity account in case I come across a course, a consulting program, maybe an opportunity that I otherwise didn't plan for, and I don't want to go into my main account. I know you and I, all of us, sort of look at our bank account and we don't want to drop below a certain number, but every single month if you put some money into this opportunity account, whether it's for some sort of education or whatever it may be, or a course or a program or anything that you otherwise wouldn't want to touch your main account, your operations account. You don't want to go obviously into your marketing account, and you should never touch your savings account. Like I said, your savings account should literally be for savings in case something were to happen, in case everything were to come crashing down. You can sometimes dibble and dabble between your opportunity and your savings account, but you should put some money into your opportunity account every single month, so that you don't have to go into your savings account or into your marketing account. You don't want to, pick from here, pick from here, pick from here, pick from here. Let all the money come into your main operation account, put some money into your marketing account, some money into your savings account, some money into your opportunity account, and then last but not least, and the most important of all, is your tax account. One of the most important things you guys should do is every single month, at the end of the month, look at your profit and loss and see how much you're actually profiting, and just take 30% right off the top. You can do more if you guys are making a lot and you have to pay closer to 40% taxes, maybe state taxes, depending on where you live. But just take at least 30% right off the top, depending on your deductions and your expenses. It could come down, it could go up, it's hard to say exactly, but you don't want at the end of the year to have to take off 50, 100,000. Like I said, it all depends how much you guys are making, but you don't want to be having to take away all this money out of your operations account because you didn't otherwise account for taxes. So at the end of the month, look at your profit and loss, and from there just take 30%. For example, if you make 30 in total, you have 20K in expenses, so you're basically getting taxed on $10,000 in profit. That would be 3,000. Just take off 3,000 for that month of profit and put it into a tax account, so that at the end of the year, or if you're paying quarterly taxes, you can already have the money set aside so you don't really get hit. Because like I said in the beginning, if you're somebody who doesn't like to drop below a certain amount inside of your account, if you don't account for taxes each and every month or each and every quarter, at the end of the year, you're might have to deduct $50,000, $60,000 to pay the government, to pay Uncle Sam, and to pay your state taxes if you live in a state that requires state taxes, or if you live outside the USA. I'm not sure how the tax laws work there, but definitely just take 30% off. It's the best bet. You won't have to worry about it, and you won't get hit as hard. And then how I personally recommend you do it, but like I said, sit down with your tax professional, is to put yourself on payroll. So depending on how much your business is making, you can literally just pay yourself every 2 weeks, but you should not be dipping into your business accounts to pay yourself. No personal expenses should come out of your operations, marketing, savings. You shouldn't be touching your savings or your opportunity or your tax account. The only thing that should really be being touched every single month is your operation account for your daily expenses for your business, and then your marketing account to keep reinvesting and growing your business. So like I said, I'm gonna do a video soon with my accountant, so not only can she see if maybe you guys are looking for a new accountant, she's pretty good and she knows a lot about the tax code and law, and she could point you guys in the right direction. But like I said, the different accounts you want, just to reiterate it, is 1, operation account, that's your main account for your business. 2, your marketing account, that's what you're gonna be using to reinvest and grow and scale your business. 3 is your savings account. This is, worst case scenario, 6 to 12 months of emergency money. 4 is opportunity account, a course, consulting, an opportunity that you otherwise wouldn't have budgeted for. And then most importantly, your tax account that you're paying your taxes out of. And then put yourself on payroll, and you can have your own personal checking and savings that you get paid every 2 weeks or every week, however you want to set it up. So those are the different accounts you need to run your business. Again, thank you guys for watching. Be sure to put a thumbs up on the video and subscribe to the channel for more videos just like this. And I'll see you guys in the next one. Peace.